I have so many questions about charts and no one to help me. If only there was a place I could go to learn which doesn't cost a fortune.
There is such a place. It's my Patreon. It's £7.50 a month and you get 2 live streams a week. Ask me anything you like about any chart that you want.
What about trading platforms?
Well, in the video description I've got a link for all the best ones and you can get up to 20% off all your trading fees for life.
Thanks CryptoClick, you demand bro.
Hello everybody, welcome back. Let's have a look at the overall market. Okay, so we'll start off with NASDAQ because everybody and their mother will be talking about CPI today, CPI. That's not going to be out for a little while yet, but it will be out probably UK time for, I don't know, about 1 o'clock, 2 o'clock, thereabouts. Until then, we're probably just going to be meandering, just kind of going sideways, which is in a way what traditional markets are trying to do anyway. They're not going to be able to do anything, I wouldn't have thought, until the moment. Now, some people might want to position themselves accordingly, and that's according to your own preference, to be honest with you. The charts are giving subtle bearish tone to them, right? But that doesn't mean that they can't skyrocket if inflation figures appear to be significantly lower than expected, right? The expectation is that they probably will be lower, so this might give us, we might see something as much as a percent or two less than the last month's CPI data, but it's all speculation. Part of the reason I was talking about the everything bounce is that we were looking at oil and how oil had topped, right? Or I felt oil had topped on its chart. Fundamentally, it's probably not topped, but on its chart, it had topped and it was going to be coming down to incrementally steps lower, probably bottoming around 75, with maybe the opportunity for it to bottom around 65 eventually, but not on this first pass. I think we're going to see a $100 barrel again soon. And the reason I was talking about commodities and oil specifically is that we're all thinking about what this means for inflation. What is inflation, right? So inflation is a whole range of things, but one of the main drivers as well recently there's been oil prices, petrol prices, or gasoline, if that's what you want to call it. Petrol is what we call it, diesel, whatever. Fuel, basically. And so we think about this, the impact of commodities, but especially fuel prices, and what that means for us when we go and fill our cars up. We're like, well, it costs more. That's inflation, isn't it? It's an inflated price. So you would expect to see with lower oil prices, even though these aren't really considered to be low prices, these are still quite high, but they're lower than what they were by the tune of, 25% from their peak? We'll measure this portion of the peak, about 26% down. So we should expect that to have started to filter through now, because we were talking about a top over here in June. So now this is like, full 2 months away now from that top. Hopefully we should have started to... I don't feel it when I fill my car up, to be honest with you. I don't really notice any difference. It is what it is. The price is the price. And to be honest with you, I try to look away from the price. I have to fill the car up. Best thing to do is to just ignore the price, really, if you can. But yeah. So I don't really notice the difference, but there will be a subtle difference, not much. And that should help with the inflation prices, the inflation figures, but... not really feeling it too much, so maybe that'll filter through, and we've had all these rate hikes as well. That should hopefully start to touch the sides a little bit, but we'll wait and see. So all I'm saying is that as far as sort of trying to crunch the numbers in your head, in theory, it should be a little bit lower now. It should be a little bit lower, at least maybe just a tiny smidgen lower. But if it's not, it's no big deal. It is what it is. Things are going out of control, and we can't really predict what the deal is. Now, personally, and I wouldn't suggest you do this unless you've got what I call screw it money. Personally, I have a feeling that it might be lower, and so I've put a little gambly trade in, position myself in, just in case it goes my way, which is up. Despite the charts all looking bearish, it's a bit of a gamble. So let's have a look at the charts now, because I know that that's what you want to hear. You don't want to hear me rambling on about petrol or gasoline. So we had this uptrend of support on RSI here for this sideways and then slightly up movement for Bitcoin, to which we've broken down from a little bit at the moment. Now this is still early days. This RSI is today's RSI. It could end up here. We could have a huge move up, and the RSI will close higher, back above the trend line. So that's no big deal. It's just a trend line. It's a little rough. We also have, unfortunately, small drives, although they are real, bearish divergence, right? You can think about this as well as I suppose a symmetrical triangle, right? And you know me, I like to think of triangles breaking before it gets to 70%, because at 70% or towards the end of the apex usually gives a fake out, or you know, whether it's a breakout or breakdown. This would apply to RSI too. And look, we are more than 70% of the way through, so we could entertain realistically the idea that this is a fake breakdown of momentum, and then we shoot straight up. Even though there is bearish divergence, even though there is support, it could be a fake breakdown. But at the moment, yeah, bearish divergence is never a good look. It's never a good look, but it is pretty weak, but it is definitely there. So that's bearish, unfortunately, and a breakdown. So technically it's bearish, although the only reason I've positioned myself in certain cryptos, and again with only what I would consider to be screw it money, no leverage positions or anything like that, is because I have a feeling that the CPI might be lower than last month. So inflation coming down a little bit, maybe even peaked, but definitely lower than last month, and that would cause a pump in the market, maybe even get sold off, but a pump in the market, and it's going against everything the chart is telling me. So that's your daily. We've also got momentum dwindling quite significantly, I suppose here, bearish divergence on the histogram on the way up as well as a fresh bearish cross, although we're above the 0 point as well. So again, you know, momentum leaving this chart right now, threatening very realistically, if it was just a chart on its own, deeper pullback correction, whatever you want to call it, probably to 21,600, which is our horizontal here. It's also the Bollinger Band bottom on the daily and the 50 simple moving average. There's a lot of support around here, and we might only end up bouncing, you know, going down to there and bouncing. Who the hell knows, right? But that's, again, there's a fair bit of support down there based on a daily. Moving to some other time frames, just for a brief moment. Nothing really, I suppose, when it comes to momentum on the 12-hourly of any significance. Just bearish divergence on all time frames really, and obviously the 4-hourly, we will have more or less the same read. The thing we'll be looking for on here is our position on the 200 exponential moving average, which is basically where we're trying to remain above right now, 22,800. So again, you know, that this is all reasonable support for us. You know, it's all reasonable support, but you know, there's not much to it, to be honest. It would only take a little bit of a push to break us down from this level, come straight down to 21,600, and if that breaks, then we're going back down to 20, maybe even 19. Probably quite quickly, I would say, probably quite quickly. It wouldn't take much for that to happen. And this all goes hand in hand, so that'll be a 16% move down, back down to those range lows. This all goes hand in hand with this bearishness, goes hand in hand with the fact that I think that oil is about to bounce. It's the only position that I put in at the beginning of this week. Outside of the gamble trades, this is the only TA position I put myself in. A small leveraged position on oil. Looking for that bounce from here, moving us up towards around maybe about $100 barrel, and maybe continuation after. So this is going to, you know, I believe will cause an inverse effect on stocks. So we've got an area of significance on oil giving us a bounce. We've got an area of resistance on Nasdaq. We've also got a fresh rejection on the 200 exponential on the daily here, offering further downside. So I'm not looking for this. I'm not calling for massive big moves. Just like I wasn't calling for a breakout when I called for the everything bounce. It was simply just a bounce. I said, look, we're going to have a decent bounce here. Everyone was saying, no, we're not. No, we're not. Did you not see that other YouTube channel with loads of subscribers? They said we're going all the way down to. I was like, no, I didn't see that actually. I just looked at these charts and, you know, put the 2 and 2 together. It looks like an everything bounce. And then obviously now it's bounced. People are still scratching the bottom of the barrel looking for some more gains, you know, because they didn't get the bottom like what we did. They didn't get the bottom, and so they tried to get the top. But like I say, if we break out of this, which is possible, it's possible in the form of, you know, a decent CPI data coming through, then the next target for the Nasdaq is a fair bit higher than where we are right now. So we measure it from this candle all the way up to here. We'll be looking for another 14% move. We only moved 20% on the Nasdaq. To move up a 14%, it would be decent. And we are bouncing roughly, or holding, should I say, not bouncing, but we're holding on the 10 exponential. That's a decent area to try a position in if the chart was effectively bullish, and if the CPI data comes through nice, then you'd look at this and go, well, actually, forget the triangle, man. Forget the triangle. We bounced on the 10 exponential, man. And that's true, and we did. But the rest of the chart's pretty bearish. Bearish divergence, fair play, but yeah, it is what it is. So what I'm trying to put across here is that oil is technically bullish, with bullish divergence, looking for a fresh cross on the histogram, bouncing from a decent area, just floating above $85 a barrel. Nasdaq, Bitcoin, all with bearish divergence, especially Nasdaq has got its rejection on the 200 exponential and a giant descending triangle. Altcoins largely are going to fall with Bitcoin. They're not going to move on their own, and they'll likely fall harder because we can take ourselves to the Bitcoin dominance. I appreciate this video is going on quite long, but it's worthy of thinking about all these things. You see, the Bitcoin dominance chart at 41.28%. We're getting ever and ever closer to the 40% dominance zone where problems can occur. The chart is bearish though, it's a bearish chart, so further downside on this chart is likely, but I just wouldn't want to be hanging around in altcoins at 40%, so for the moment altcoins still have that in its favour, a bearish chart which is on here, which favours altcoins generally speaking, but I'm not particularly convinced. I always say it's like a train dodge, when you're in altcoins, the closer you get to significant support on the dominance chart is very much like a train dodge. You can stay on the tracks until you see the whites of the eyes of the train driver and be a hero, but you do run the risk of getting sort of completely murked in the process, so it's up to you if you want to get off the track now while you can, or if you want to see the whites of the eyes and remain a hero or die, basically. So long story short, the charts generally for traditional markets, as in like stocks and indexes and Bitcoin, and for the majority of altcoins from what I can see, does tip in favor of bearish moves. So they all do look like they want to come down. Unfortunately, that's what they look like. However, the side note would be that if the CPI data comes through in a favourable way, then they'll all go up, and the bearish divergence and all the shorts that have been stacking on a technical basis would be appropriate to stack some shorts around these levels. If it wasn't for the CPI going to throw a spanner in the works, you'd be thinking on the right page. Me personally, I think that the CPI is going to be a little less than last month's, and that would cause a pump in the market. And then after this, like a week from now, and the markets have settled from this madness that's going to ensue later on today, then we can start to trade more appropriately. Like I say, I'll still favour oil going to $100 a barrel. I still favour downside on traditional markets and probably Bitcoin, because of the nature of and the position that they look in at the moment, with the inability to sustain higher value and being in these positions. So we'll let the market do what it wants off the back of the CPI data. But if there was no CPI today, I would definitely be saying downside is most likely, and I wouldn't have positioned myself in some of these alts and Bitcoin and things like that. That's just a bit of a gamble, because I think that inflation will be a little less, and it will just cause a pump in the market. And again, if everybody's looking at the charts, which is what they should be doing on a normal day, they would be stacking shorts. And you know what happens when shorts get stacked? They can get liquidated, and that's probably what I think is most likely going to happen. But again, that's not based on the charts. People stacking shorts at these levels would be treating the charts appropriately. That's what they should be doing based on these charts. They are more bearish than bullish, without doubt, without question. But CPI is going to, I think, is going to run through those. Could be wrong though, which is why I'm not doing any leveraged outside of oil, for instance. And yeah, the money that's gone into that, so it's what I would consider to be screw it money, and it is what it is. Right, I'm going to leave it with you there. Play it safe. Don't do anything irrational. If you haven't got money considered to be screw it money, wait until the CPI is done. If you can't afford to lose any money, today is not your day. Really, it is a gambler's day. It's penalty shootout at the World Cup day. That's what it is, and we'll just have to see how the match unfolds. Right, so I'll leave it with you there. The live stream will be tonight. Couldn't be last night. Kid's not very well. She's a little bit better now, so I expect everything will be fine. Right, thanks for watching, guys. Take it easy. Have a good day.